Welcome to The Explainer. Today we are diving deep into one of the biggest questions out there for, well, pretty much everyone. What's the future of oil? For years, the whole debate was about supply. Are we going to run out? But now the script has flipped. It is all about demand. So let's break down the two powerful and totally competing visions for our energy future.
Yeah, for more than 50 years, we've heard these predictions that we are about to run out of oil. My own dad, he's a geologist. He told me that when I was 10. But that prophecy, it was always about supply. What if, this time, the prophecy is really about demand? What if we're not running out of oil, but we're running out of uses for it?
To really get this, we've got to look at the two dueling forecasts from the absolute titans of the energy world. So, first up, the International Energy Agency, or the IEA. They represent the world's biggest energy-consuming nations, and, let me tell you, they see a massive shift just over the horizon.
Now that is a bold statement. The IEA's whole argument is that we are right on the cusp of this historic turning point for oil. And they're not talking about 2050 or even 2040. They are saying the peak is coming within the next 5 to 6 years. Wow.
The data here tells such a fascinating story. You can see it right there. The sharp rebound after the pandemic, sure, but then the growth just slows and slows until it just hits a ceiling right around 2030. According to the IEA, what you're looking at, this chart, it's basically a picture of the beginning of the end of the oil age.
So, what's causing this dramatic flattening? Well, a huge driver is the electric vehicle revolution. The IEA is projecting that the switch to EVs will displace an incredible 6 million barrels per day, that's MB per D, of oil demand by 2030 alone. To put that into perspective for you, that's more than the entire daily oil consumption of Japan, just gone, wiped off the map in just a few years.
And the crucial point here is that it's not just one thing. It's this powerful combination of forces all hitting at once. You've got the stellar growth of EVs, absolutely, but you also have regular cars just getting way better mileage. You've got big societal shifts, like more of us working from home, which cuts down on commutes. And get this, you even have oil-producing countries in the Middle East planning to burn less oil for their own electricity. It's like a multi-front assault on oil demand.
And this is where it gets really interesting, because it shows you how complex this all is. While demand for fuels that move us around, gasoline, diesel, is set to plateau, our hunger for other oil products is still growing. We're talking about the basic building blocks for plastics, for fertilizers, for synthetic fibers. So even in the IEA's peak scenario, the world is still going to want more of these essential petrochemicals.
A huge piece of this puzzle revolves around something called NGLs, or natural gas liquids. Now this flowchart, looks a little complicated, but the key takeaway is actually pretty simple. These are lighter liquids, think ethane and propane, that come out of natural gas wells. So they aren't crude oil, but they do count towards the total liquid supply. And crucially, they are a primary ingredient for that growing petrochemical sector, and they're projected to make up nearly half of the increase in global oil supply capacity through 2030.
Okay, but that is only one side of the story. On the complete other side of this debate, you have a totally different vision for the future, and this one is coming from the Organization of the Petroleum Exporting Countries. You know them as OPEC.
OPEC, they look at the world and they basically say, peak demand, not so fast. In their view, the age of oil is far, far from over. They're not projecting a plateau at all. They are projecting steady, powerful growth for the next quarter century.
And just look at this chart. The contrast with the IEA's forecast could not be more stark. There's no peak here. There is no plateau. It's just a strong, confident, upward climbing line, rising from about 102 million barrels per day today to over 120 million by 2050. OPEC sees a world that is hungry for more energy, and they believe oil will be absolutely essential to fueling it. In their case, it's built on some of the most powerful forces that are shaping our planet right now. We're talking about another 1.6 billion people on Earth by 2050, a global economy that more than doubles in size, and a massive surge in energy demand from developing nations outside the OECD. That's basically the club of wealthy developed countries.
See, for OPEC, the story of the 21st century isn't about decarbonization in the West. It's about billions of people in Asia, in Africa, and Latin America getting their first car, taking their first flight, and buying goods made from plastics. They believe EV adoption will be much, much slower than predicted because of cost and infrastructure hurdles. And that good old-fashioned gasoline cars, they'll still dominate the roads for decades to come.
And to meet all this soaring demand, OPEC calculates that the oil sector is going to need a truly mind-boggling amount of investment, $17.4 trillion by 2050. That's about $640 billion every single year. It's a crystal clear signal that, in their view, walking away from oil investment now isn't just a bad bet. It would be a catastrophic mistake that would lead to energy shortages and economic chaos.
So, we have two highly credible, data-driven organizations, the IEA and OPEC, looking at the exact same world and drawing two wildly different conclusions. One sees a peak in 5 years, the other sees growth for 25. So what is going on here?
Well, the answer isn't really in the raw data itself. It's in the core assumptions that they are making about the speed of change in 3 incredibly important areas.
Okay, so this slide right here, this is really the heart of the whole debate. It is a fundamental disagreement on the pace of transformation. The IEA assumes this rapid, policy-driven transition where EVs and clean energy quickly cancel out the growth in developing economies. OPEC, on the other hand, they assume a more gradual, reality-checked transition, where the sheer force of economic and population growth in the developing world just overwhelms the pace of change, and where regular people push back against policies they see as too expensive or inconvenient.
And OPEC's report, it points to real-world evidence to back up its skepticism. They're citing data that suggests the EV transition might not just be a one-way street. This idea that some of the early adopters are getting frustrated with charging and costs, well, it adds weight to their argument that the road away from gasoline is going to have some bumps, some detours, and maybe even a few U-turns.
Now, here's something really interesting. This is where both sides actually agree. The future of economic growth, it is not in the developed world. Non-OECD countries are forecast to grow more than twice as fast as the OECD nations. So the billion-dollar question that separates these two forecasts is simple. Is that growth going to be powered by new technology or by the same oil that powered the West's development in the 20th century?
And this isn't just some academic exercise for economists, right? The outcome of this forecasting battle is going to have massive, tangible consequences for every single one of us.
What you really should take away from this is that everything is on the line here. Trillions in investment, the price you and I pay at the pump, the fate of global climate goals, the balance of global power. I mean it. Whether the IEA or OPEC is closer to the truth will literally shape the world our children inherit. And all this, it leads to a really fascinating twist. Just think about it for a second. Forecasts don't just predict the future, they can actually influence it. If investors and big energy companies believe the IEA's forecasts that demand is going to peak soon, then why on earth would they pour hundreds of billions into these huge long-term oil projects? They probably wouldn't. They might just pull back on all that investment. And that leaves us with this final provocative thought. If investment dries up because of the fear of a peak, it could actually lead to a supply shortage long before demand really falls. That would mean crazy prices and energy insecurity, which, ironically, could slow down the whole economy and speed up the switch to alternatives. So the real question is, how much can our expectations about the future and the financial bets we make based on them actually create that future? The battle over the future of oil, it might not be fought in the oil fields, but in the minds of investors.